Good afternoon, ladies and gentlemen. Welcome to Better Finance International Conference, and I also welcome everybody who is joining us online today. It is a pleasure for me to open this discussion because we are going to discuss two topics that are very timely and quite relevant from retail investor perspective. So first, we are going to discuss how to integrate European capital markets in a way that truly delivers for retail investors. This package, so market integration and supervision package, is a very important step, but is only for us one piece of the savings and investment union puzzle, because the infrastructure integration can remove bottlenecks and can make cross-border activities scalable, but it will not on its own deliver the end goal, which is retail relevant market clarity, enforceable outcomes, and confidence across the full investment life cycle. Some could ask, why is this package actually important for retail investors? And it is very important because fragmentation has a real end-user cost. We do not see, retail investors do not see the full market because prices are spread across many venues, because some liquidity sits in systemic internalizers as dark trading, the data is fragmented. And so the result is that retail investors pay indirectly through wider spreads and weaker execution. So today we have a question whether we are moving really from the ambition, because the ambition is there, to real outcomes for European citizens. And for us, of course, integration is not an objective in itself, and it's not a goal in itself, but actually it should be really measured whether it improves outcomes, and with improved outcomes, whether it also increases retail participation and the trust. For Better Finance, of course, investors should be at the heart of the EU capital markets, and for us it means that fair and simple access to investment opportunities should be ensured across borders, that there should be transparent and comparable information for individual investors, effective best execution in an increasingly complex market structure, and a strong supervision and enforcement. And without all of these, integration risk benefiting maybe some other stakeholders, but not necessarily end investors. So despite progress that we have already seen, the European markets remain fragmented in practice because data is still difficult to access and to compare. We don't think much has changed since our first research into the topic in 2021. Costs remain too high and insufficiently transparent. Cross-border investment remains limited, and retail participation in capital markets is still low. So what we will discuss today in the first panel, we would like to look at the angle that not too often is actually discussed when MISP is discussed. We would like to also discuss whether the package can deliver better execution, lower costs, and genuine cross-border access. So what actually it really means for retail investors in practice. The second topic is also quite timely for us. It's private markets. Across advanced economies, the number of listed companies has roughly halved since 1990s, with the listing consistently outpacing new listings. And you may have seen, if not, I encourage you to see and go to Better Finance website. We have recently published a paper on the listing. And in our research report that we've done with our German member organization, DSW, we document what appears to be a sustained contraction of Europe's listed universe, with the listing and listings outpacing IPOs. We also point to a lack of coherent framework for market exits. So private capital has expanded significantly. It enables companies to grow larger and stay private longer. And as a result, we also observed a momentum both from policymakers and industry stakeholders to encourage to broaden retail investor access to those markets. And from our perspective, it creates both opportunities for diversification and possibly higher returns, even though in the second panel we will hear about also the French perspective, when especially the part on higher returns is not necessarily always correct, but also some risks around transparency, valuation, liquidity, and conflicts of interest. So getting the balance right will be very important. And we will discuss this today as well. So before I give the floor to Tatiana Panova, let me take a moment to thank everybody who is here with us today. First of all, our moderators and panelists. Thank you all so much that you agreed to come and discuss this with us. To representatives from the European Commission, from ESMA, from other European and national institutions, and also to all our partners that made this event today possible, as well to the audience. We thank you to come and discuss with us, and we very much count also on your questions and on making this discussion interactive. So whenever you feel like asking a question to our panels, please raise your hand and we will make it possible for you. Thank you so much, and I wish you an engaging and interesting discussion.